and welcome to the Digital Banker Newsroom. I'm your host, Mobashir Kazmi, Head of Research at the Digital Banker, and today we have with us Dyanne Carenza, who is the Vice President of Global Trade and Working Capital Solutions at Scotiabank. Dyanne, it is a pleasure to have you here on the newsroom. Firstly, many congratulations to you and the team on winning the Best Trade Finance Platform Initiative, Outstanding Use of Technology in Trade Finance, and Outstanding Supply Chain Finance Solution Awards, as well as a highly acclaimed recognition for the Best Automation Initiative under our Global Transaction Banking Innovation Awards 2024 program. A tremendous achievement indeed. We'll now take a closer look at these award-winning initiatives. So, Dyanne, Scotiabank's robotic process automation bot has been designed to validate credit limits for trade finance. Why did the bank consider intelligent automation of this business line necessary? And how is this project aligned with Scotiabank's strategic pillars?
So glad you asked. And first off, let me say we're thrilled and delighted for this recognition. So thank you very much to you and the Digital Banker organization. And, you know, this does very much align with our key. We have 4 strategic pillars at the Scotiabank level. But before I get into that, really for us, global transaction banking is at the heart of what we do, and it goes beyond mere financial transactions, right? It really embodies the methodical collection of, the secure storage of, and efficient movement of funds, and all really tailored to empower our clients. That's really what drives us, and that's our commitment to innovation is always about looking for those ways to enhance the experience. And it's really, as I mentioned at the outset, we're delighted to be acknowledged with these prestigious awards because it's reasoning and proof that we're doing the right things. So I mentioned the 4 strategic pillars. So really this robotic process automation, or let's call it RPA between the two of us, right? This will make it a little bit easier, is really aligned to the 4 pillars. So the first one is growing and scaling in priority markets. So for us, the whole smart automation and process reengineering teams are looking broadly right across the organization, looking for opportunities where we can really, increase efficiencies where most needed. So the strategic deployment of this RPA really allowed us to enhance our supply chain finance operations, which is a key focus area of business for us, and enabling us to scale our operations more effectively, handle more transaction volume, while maintaining and even augmenting our exceptional quality and speed in terms of servicing the client. So that was pillar 1. Pillar 2 is earning primary clients and enhancing client relationships. So again, the RPA was really about improving the overarching client experience, minimizing errors, and expediting the service delivery. And it really helped deepen the client relationship. Because with the heightened accuracy and greater efficiencies, the client satisfaction and their perception of the quality of service just increased their level of loyalty, and the kudos and the commentary that we got from those primary clients enabled us to either go and seek out other additional primary client relationships as well as enhancing our existing ones. The third strategic focus for the bank, and where this aligned as well, is all about making it easy for clients to do business with us. And what a better way than looking for smart automation opportunities. So really in this user-centered design of the RPA bot really allowed us to drive that home. So we have an intuitive interface. We have the technology support teams that really work, a real-time oversight on this, guaranteeing a seamless experience for both our employees and our clients. Really, you need it at both ends for it to be effective. All of the streamlining and digitization of our processes, they've really drastically cut down the time and the effort needed for, transaction data entry and for the processing. And we can, return and fund return calls, answer different questions, but also fund on a much more effective and turnaround times. Again, overarchingly enhancing the client experience. And finally, for the fourth pillar is really about winning as one team. So this all came together. This wasn't me. This was a team of many people in many different areas, from the product side, from the client facing, operations and technology across several geographies, that all came together with that client mindset, but really with the culture of innovation and collaboration, which is something that we really we really strive to achieve and embody and live it on a day-to-day basis. It's strengthen our internal capabilities to deliver and to come together, and also our commitment to operational excellence and empowering Scotiabankers to be their best selves and to bring them and to deliver a seamless experience for our clients. And as we look forward, we also see that this has great scalability, and we are looking over the next number of months and years to see how we can deploy this right across our geographies, because it has represented to date, we've estimated roughly 7 work weeks of savings that this has directly translated to. So as we look to amplify the usage, and we are looking more and more, when we build something, we want to be able to deploy it and scale it. So this is something that we are looking to spread out and to offer right across our platform.
Very interesting. Thank you for that, Dyanne. Also, as an early mover, how has Scotiabank's bilateral credit insurance initiative positioned the bank for sustained growth while mitigating credit risk?
So for your, the audience who is listening, they probably know some of this intuitively, but we really looked at it in 4 different ways. So first and foremost, forming a strategic alliance with insurance providers, right? We're not the experts there. We can't be all things to all people. So we need to augment what we offer. And those strategic alliances with those partners really allowed us to adopt a bilateral approach to the policies that have significantly mitigated risks, protecting both the bank and the client. So that was one area in terms of the positioning. The other way was really about the policies enabled us and empowered Scotiabank really to optimize our capital allocation for these working capital solutions. Now, this isn't only a bank advantage. This is also, there's incremental value here for our clients as well with the capital allocation piece. And if I go think of it, a couple of others, it's also in that reduced risk profile. So yes, related to the optimized capital allocation, but we're able to increase the support we can provide for existing clients. And as they move into either higher volumes of transactions as their business grows, and or as well as cross other markets, we're able to continue to be able to tailor a specific solution to meet their needs. And again, it's all about the client. So further, strengthening that client relationship and positioning Scotiabank as their trusted financial partner. And lastly, the risk mitigation element is always important as well. And so as we look to, you heard me earlier talk about the strategic focus of earning primary client relationships. Well, I bring it back here in terms of with that additional tool and that additional risk lens, we can actually target even more strategic client relationships.
And on that note, and looking ahead, Dyanne, what are the implications of the bilateral credit insurance initiative for both clients and suppliers alike?
There's so many, but to kind of breaking them down to say a couple of them. So really we look at it primarily, obviously, I've talked a lot about the client here. So it's really about improved access to financial services in general, right? Clients who perhaps would not have thought of, insurance as part of their financial or working capital financing needs, we're bringing them an interesting value add solution, which is really supporting their cash flow needs. And there's operational efficiencies in there. So improved access, there's a cost efficiency element as well. So the purchasing power of Scotiabank being able to go to these insurance providers and look for solutions on behalf that support our business and that support us supporting our clients makes it a more cost-effective way for our clients for help us to help them supporting their growth. It also provides us with enhanced business growth opportunities. I alluded to that earlier about our clients as they expand into new markets. This helps them, protect and mitigate the non-payment risk and that there might be with a net new relationship, a client-supplier relationship. Another is financial stability. So with the risk of reducing or mitigating the risk of non-payment, clients have better line of sight on their working capital, their cash flow forecasting can be more attuned and more, let's just say, a more stable environment. And then lastly, probably that tailored, that bespoke solution that we can bring, the flexibility of having that, the possibility of insuring. So the programs enables us to really look at and be creative, if I could use that term in the financial services sector, but enabling us to bespoke and really design and customize a solution for our clients.
Dyanne, thank you once again for those terrific insights. We really appreciate your time today for sharing with us Scotiabank's perspectives here at the newsroom. To those watching, stay tuned for some more great content coming your way through the Digital Banker newsroom. Thank you once again, Dyanne, and many congratulations to you and the team.
Thank you very much.